And let's welcome in Jim Lanzone into the Yahoo Finance studio. Your first time.
First time. I'm a rookie. I'm glad to finally be here downstairs from my office.
Welcome. I know we work in the same building. Don't always get you down here. As we just pointed out, you have been at the helm of some major companies that I think a lot of viewers are familiar with. CBS Interactive, Tinder, Ask Jeeves if we want to go back. But I want to start with a company that I think some viewers may not be as familiar with, which is eTour.
Oh, wow.
And that is, of course, a startup that you founded back in the 90s. And it was right in the middle of the dot-com boom. And I want to start there because I get the sense in looking through a lot of your interviews that your experience in the dot-com boom, the ensuing crash, has really informed a lot of how you think about operating these companies. So my question to you is, how do you think about that period of time? And knowing what you experienced then, how do you view what's happening today, especially in the tech landscape?
Yeah, I mean, it really is a great question. And again, I want to say I love being down here. It's great to finally be here. And hey, we follow Dr. Doom, so we can spin this to a more positive place. Yeah. But look, that definitely informed it. I was one of the co-founders. I wasn't the CEO. I was like the product guy, co-founder of eTour, which by the way was not a travel company. It was a touring the web. It was like a search and navigation company that was founded in 1998, so a long time ago. And we went way up and way down. Raised $50 million when that was a lot of money, and almost went public. And then the market crashed, and we crashed, and it's heartbreaking to put in that company, we founded out of business school. I mean, I'd never really had a real job before doing that. I'd just been an intern. And so, you put your heart and your soul and people trust you and believe in you. And it sucks to go through that. And that crash, which, more movies should be made about that time period, but it certainly informs it. Because, first of all, I learned a lot that I know about product management and how to manage internet companies that helped me later on. A lot of hands-on experience. And then, going through that, which then happened again in 2008, happened again in 2020, happened again this year. What I would say is every one of them is different. If you kind of look at the causation of each one of these, right? You can't really equate the dot-com boom and crash to COVID and what happened with the world shutting down, or the global financial crisis, or now, which is kind of an interesting combination of both. They're all unique, they're all different, but certainly, and we could talk about it, some of the ways that could inform both opportunities and challenges.
Yeah, I mean, let's talk about that a bit more. What do you see as the parallels that are there, and how does what you experienced in the 90s kind of inform what you're seeing today? Yeah,
and again, I think, it's ironic, but after that startup, I wound up at Ask Jeeves, which was a public company. We then sold it to IAC in 2005. I became CEO right after that and was there for a long time. When I left, I then actually got funding to do another startup. And the market crashed again 2 weeks after that. So right in the heart of me getting funding. And what I'd say in both situations, and I think it's a parallel for today, is first of all, if you're an existing company, one that has been through the boom and raised money during the boom at valuations that were pretty rosy, and you went through hiring and perks for your company, and probably easier on the revenue side because other companies weren't going through those challenges. You have to really reevaluate quickly and get those costs under control. Kind of reevaluate how you view your market and your valuation. In a lot of cases, if you're a public company, again, it's easy to sit there and think about the way things were and operate that way. I think the companies that adapt the most quickly, if you're an existing company, are the ones that are going to make it through. I think Bill Gurley, who was one of my investors at Clicker, which was my second startup, said it right a couple weeks ago. He said, this is the best time to get funded as a company. And I agree. If you look at every one of these crash periods, those are when some of the best companies have been born. Or when early stage ones could make it through the gauntlet, then the rewards on the other side of that are great. I actually, that leads us to Yahoo, but I think we're in a very similar situation here.
So let's talk about Yahoo. Obviously, you're the CEO, you're a big boss. This is a brand that's gone through many iterations. Started in the early 90s, co-founded by Jerry Yang. It was a search engine. Since then, it's grown many tentacles into content. We've got Yahoo News, obviously Yahoo Finance, Yahoo Sports. When you look at it today, how do you define the Yahoo brand?
Well, coming in from the outside, the great thing is that you're not tied to the past. So, and I always say this about this opportunity, and I just passed my 1-year anniversary here, but if you didn't know what it was called, and I think the brand has a lot of strengths. I had somebody pretty prominent tell me a couple weeks ago, he thinks the brand is worth as much as Apollo paid for all of Yahoo. So, there's a lot we have to do to earn that, but it is, I think, a great brand that has a lot of goodwill. If we treat it right, things can happen. But the truth is, if you were to come in today and just look at it objectively, without the brand, you would say hundreds of millions of users, doing billions of revenue, that's very profitable, and is pretty entrenched in the various verticals in which it's strong, right? Top 2 in email, sports, news, finance, and these are amazing categories. We have a huge advertising business. We're one of the biggest ad sales forces on the internet. We have real ad tech. Behind the scenes. There's a lot of other things we haven't even talked about, including AOL, which, again, in my past, I've learned how things like that, which is even older than Yahoo, it's very, very profitable. If you were to take an objective look at those assets, you would say that's an amazing, investment opportunity, given the fact that we've been spun out of Verizon, we're private again, and that allows you to do, the things that you need to do behind the scenes to improve it. And if I were to look at it again objectively, I'd say it's not, I think one of the things people can mistake about Yahoo is thinking of it as one thing. Right? You've
said you hate the question whether it's a media company or a tech company, a content company, but
yeah,
there are a lot of people who are saying, well, what defines the Yahoo brand?
It's a product company. Email is a product. We still are in search and one of the top 3 players in search. That's a product. Yahoo Finance. Content is one of the products that we offer on Yahoo Finance. Stock charts, information, these information sets that we provide to allow somebody to become a better investor. Those are all product features. And I do think at the core, we have media. Technology enables literally all of it. But at the end of the day, we are a product company, vertical by vertical. And I look at the brand independently as well. Yahoo Finance is a very strong brand, one of the best. And one with some of the most traffic in the finance vertical. So does Bloomberg, so does Dow Jones, so does CNBC. That's very different than Yahoo Sports with ESPN, or it's very different than news or email versus Gmail. And as so as a brand, I think about them pretty independently. Will they get woven together, at a larger level? Yes. Are the days gone when you think of it as a portal? Yes.
So you mentioned some numbers here. I know you like to highlight this a lot. 900 million users. You're talking about Yahoo assets, billions of dollars in revenue. You talk about the profitability. And yet I know over the last year you have been asked over and over what the turnaround story looks like. Why do you think it's been defined as that if those numbers are there?
Probably because it hasn't historically been successful at pulling that off. Again, I think the bar changes. I think what the team in the 2000s were dealing with was coming in on the heels of a decision you could not reverse, which was giving search to Google and literally paying them to do it, and then the aftermath of that and trying to figure out what the business could be. Again, you were talking a much bigger company with much more to lose at that point. You had a turnaround, attempt in the 2010s again, and not just Yahoo, but the AOL properties as well. That all got solved in a way by being brought inside of Verizon for 5 years. And so our team comes in at a very different spot. What I do know is that this has all of the bones of a great turnaround opportunity, as I know it, as I've been through them before. A ton of traffic in very important monetizable categories, with being number 1 or number 2 in those categories. Those are things I can work with. We can put great teams against that, reinvigorate these products, which is certainly needed in a lot of these ways. There are reasons why these things are number 1 or number 2. There's also reasons why it hasn't totally fulfilled its potential in each one of these. So that you can work with. And coming from where we're coming from now, coming out, is an incredible investment opportunity, for those who've been behind it. And it's why, in this case, I ran towards the fire to want to do this. Because, people have asked me, what is the thing that surprised you the most about Yahoo? And they've asked me continually, and it's been the same two things. Number one is how many people are rooting for us. I think in this world, people want, for whatever reason, they would love to see Yahoo be successful still. This isn't a brand people are rooting against. They may wonder whether we can do it. That's a different story, but I think they would love to see us do it. And the other is that in a lot of ways, it's not a turnaround. Turnarounds are in trouble. This company is in really good financial position and has amazing assets.
So let's talk about the strategy that you have put in place. You've added, maybe you should say, shaken up the structure a bit, right? Individual assets now have their own general managers. That's sort of been the first thing we have seen. The changes
now
here
we're inside
too.
Baseball.
But you've also talked about seeing a spin-off in these individual brands, that you think that they can stand alone. And I can't help but think that if you think about, sort of the major, tech companies, and I know you don't want to define Yahoo as just a tech company, but you look at somebody like an Alphabet or somebody, like a Meta. They've got multiple brands that have sort of come together. Why think about them separately, and why the idea of going towards that spin-off?
Well, let's work backwards. First of all, I think they think about them separately. They weave them together. Again, YouTube is woven into Google, but those are two different teams, two different brands. Instagram and Facebook, and now the VR side, these are all individual divisions run by general managers. Susan is an amazing CEO who runs YouTube with Neil. That's very different than the team running Google kind of .com or the cloud business with Thomas. So Amazon is very much the same way. And so it's something about Yahoo where people want to think about it it's got to do with the history of it being a portal. Think of it as one thing. Certainly the brand is consistent in this case, but I think, and that story could take care of itself, but the first step is to work on them individually. Now, if you do that, and I'm not worried about it, so the notion of what will you do with these things, will they all go public together, will they all live together, will they spin off, those are all things we have the option to do, but I don't think about them because I still feel like I just got here, and our team wants to be the one to create this value. And create them across the board. So I think these are all investment opportunities. The end game for each of them is something we don't have to think about yet.
I want to end on a personal question, because in prepping for this, I looked at a lot of your interviews, and correct me if I'm wrong, but I get the sense that you like being the underdog. You have a bit of a chip on your shoulder. So my question to you is, whatever you want to define Yahoo as, let's call it a turnaround story if that's what people are saying. What do you have to prove by building out Yahoo to where you want it to be?
It's interesting. I'd say of the things that I could have done, I would say in a way they maybe would have been more in the realm of something I could have proven. In this case, this is something I've done a few times before. My teams have been very successful doing them. We have great people. We've met great people here as well, brought in new people that we didn't work with before. I'm loving the way the team here is shaping up. I love being a part of that, right? The two things I love to come to work to do are to build great products and to have a great team and of great people who love working together. And if you can do those two things with an asset that has the ability to be invested in the right way and create upside opportunity, I love doing that. There's not a day when I don't love getting up and coming to do this. There's not a day when I have angst about whether we can do this. I have anxiety sometimes about just the amount of things we have to do, but that's different, right? There's no question to me that this is doable. And so, yeah, look, I had another CEO as a compliment call me a journeyman the other time, a couple months ago, because I've been to several different internet companies at this point. I've been doing this 25 years. But for me, I know it when I see that that opportunity, and so that past is always there. I'm not afraid of being the underdog, and I do kind of like it. It's it's harder than being just somebody on the rocket ship, and it's going to go anyway whether you're there or not. I like to make a difference. The people I work with feel the same way, so I think about it probably a little more like that.
Jim Lanzone, thank you so much for joining us today.
Awesome.